Welcome back to Stock Trader School, from Rookie to Rainmaker, and this is Tactical Tuesdays. If you draw levels wrong, you'll trade like a blindfolded archer. Let's learn how professionals mark their key levels where price reacts most. Today we're going to break down how pros draw levels on their charts so that you can do it right. Ready? Here we go. Alright, welcome back to the channel everybody. It's me, your AI teacher, and this is a show where we discuss everything day trading to keep you profitable. Now today is a special Tactical Tuesday. That means we are getting straight to the point, we're not beating around the bush. We're gonna go over how to draw your levels and why it matters so much. I want you to look at this chart real quick. What do you see on here? Do you see some lines that are perfectly horizontal? Probably not, because there aren't any. What you're looking at is complete chaos. There's no rhyme or reason to these lines. This chart is drawn by an algorithm which is drawing completely random lines across the entire thing, and as you can tell, it makes absolutely zero sense. Why? Because if you draw your levels randomly, you will trade randomly. Now let's compare that to this. See anything? Look familiar? Yep, those are levels. Levels are support and resistance areas where price tends to gravitate towards during the trading session. Now if you just look at this without knowing what you're looking at, you might think this is just another random chart, but it's not. Each one of these levels represents an area where buyers or sellers have entered the market, and they've done that based off of the price action and the candlestick formations in that area. So now that you know that each level represents a very specific area of interest, whether it be for buying or selling, now you can react accordingly. You can treat them like magnets and push against them or pull with them. And that's really what makes levels so powerful. So now that we've covered what levels are, let's get into what types of levels there are. Pros will draw these levels when the market starts acting sideways. That way they know when price breaks out of the congestion, round numbers. Well, these are levels like 100, 200, 300. Pros use these because sometimes markets will gravitate towards these nice clean numbers. Volume clusters. Okay. So this is where price has moved a lot in a given period of time. Pros will draw a level here because oftentimes price will want to return to areas where it had a lot of downward momentum. Previous highs and lows, pros will draw these whenever price ends up coming back to test a previous high or low. This is because oftentimes price will want to move back up to areas where it had a lot of upward momentum. Alright, now that we've gone over the different types of levels, let's get into how to actually draw them. And before we get into that, I need you to smash that subscribe button if you're not already. This is how you stay updated with the latest and greatest in the world of day trading. Now back to drawing levels. Levels should never be thin lines. Instead, pros will always draw them as a zone. This is because price doesn't bounce off of lines, price bounces off of areas. So you always want to give yourself some room for error. The easiest way to do this is by using the body closes of candles. In order to make your zone, you're going to use two body closes either above or below your level. If you're drawing a support zone, you're going to use two candles that have closed above your level. And if you're drawing a resistance zone, you're going to use two candles that have closed below your level. This gives you a range of prices where your level is. And it also gives you an idea of when to enter a trade. Once price enters your zone, you then can look at the candle formations and price action in that area and determine which side is more likely to happen next. Now I know I've talked about how to draw levels in a couple of different videos, but this is the most important one. This is the part that you need to pay attention to. Never draw random lines. I cannot stress this enough. If you start drawing random lines, you will start trading randomly. That's exactly how you end up losing money, so take a step back and look at all of the levels that you've drawn. Are there any that don't make sense? Any that could be combined or removed? You never want to have too many levels on your chart because then you won't know which one to pay attention to. You only want to have the levels that represent areas where price has reacted to in the past or is currently reacting to. That's it. Oh, and another thing, ignore the levels if they're in a different time frame. For example, if you're trading the 5-minute time frame, don't pay attention to the daily levels. Time frames are very important. You want to only pay attention to levels that are on the same time frame that you're trading. The best way to get started with learning how to draw levels is by doing. But I know that some of you guys out there are still struggling to figure out which type of level to draw first. I want to give you one final piece of advice, and that's to keep your levels simple. You don't need to overcomplicate things. Don't try to draw every single level that you possibly can. Just focus on the big picture and only draw the levels that are significant. Trust me, it'll make your life a lot easier. That's it for this week's Tactical Tuesday. I hope you guys enjoyed it. If you did, make sure to hit that thumbs up button and leave a comment below. And remember, you're just one trade away. MUA.